Hi, good afternoon, everyone. This is Patricia with eXp Realty, and this is my good friend and lender, Shannon.
Shannon,
How are you doing, Shannon?
I'm doing well. How are you guys doing?
Wow, thank you. We get together every Wednesday to talk about your home buying journey and how we can help you. So, whether you're looking to sell a property and get into another property, maybe you're downsizing or you're buying a home for the first time, this is when we get into the we talk about contingencies, we talk about funding, loan options, you name it. Anything home buying, we're talking about it today. So, what's going on this week with interest rates, Shannon? What are you seeing in the market?
What do you think in the market? Yeah, interest rates are dropping. So right now we're at 5.75, almost to 5.625 for FHA. And yeah, things are I know the stock market's not doing well, but at least it's helping the interest rates.
Yeah, that's a really good interest
Yeah.
rate for a first time buyer that's getting an FHA loan to be in the fives.
Yeah, yeah, very good. Very good. And so people need to take advantage. I know your portfolio, stock portfolio is not probably doing so well, but it's a good time to buy for sure.
Now, are you seeing that more buyers are seeing the advantages of an FHA loan and the lower interest rate? Are they asking you about payments and deposits and what they could actually get into home today with in terms of down payment and closing costs? Are you seeing more interest lately?
I'm seeing a lot more interest right now in people wanting to buy. I think people are ready. They're over the rate shock, and now when they're getting interest rates, they're actually getting pleasantly surprised for the first time. So they're like, "Oh wow, it's better than I thought it was." All the news is giving a lot of these horror stories. So now I think the rates are better than what people are expecting now for the first time. And a lot of my educated buyers are actually even considering conventional over FHA. I was educated on PMI and the pros and cons of FHA. So not to say nothing's wrong with FHA, but um, yeah, there's more to it than just a low down payment, right? There's how much am I paying in interest, PMI, all that
Right.
stuff. Which as you should be educated on that. Sometimes FHA is not always the best option for everyone.
That's true. And that's why we go into the details with every single person that calls us to ask us about that scenario. And this is without even pulling your credit. So, in fact, today I was running a scenario for a client that is currently renting, and she's wondering if she should actually get into buying a home because the rents are so high that a mortgage payment of $35,000 to $4,000 a month is probably what some people are paying for rent these days. So we were running that scenario, and it does make sense for this client to start getting her financials ready and getting pre-qualified because they're paying substantial amount of money for rent every month. So that's money that's not building you any type of wealth. And if you buy a home, then you're definitely starting your generational wealth for yourself and for your family. So that's really exciting. One of the things that I wanted to talk about today was also when we talk about full disclosure, whether you're a buyer or a seller, you do need to disclose things if you're a buyer, such as your anything that may be pending on your credit report. If you're married or if you're single, things like that are really important when you're buying a home. And this is a real life scenario that I'm about to share with you guys. So I recently had a buyer that was interested in buying a home. So we found, looked at a few homes, found the right one, made an offer, got accepted. And
Mhm.
the entire, throughout the entire process, he was talking about buying the home as a married man, with his vesting as a sole and separate property. Now in California, California is a community property state, which means that if you are married, you can buy a property and vest at whole title as a married person, sole and separate property. But when you do that, your spouse is required to sign off on a quitclaim deed, meaning that they're relinquishing their interest in that specific property. Now, in this case, we had already gone, at least a third into the process of the escrow. And when I was talking to the client about setting up a notary to have his spouse sign off on the quitclaim deed, I was noticing some resistance there, and he did not want to include his wife. So this is something that is not possible. You cannot buy a property and vest as a single person when in fact you are married, because you're fraudulently trying to purchase a property in that regard. And escrow will also ask if the client is married, or if they're separated or divorced, whatever the case may be. So as far as disclosure goes, you do have to disclose your marital status, and not just an escrow, but when you're applying for a loan as well, because things like that will come up on your tax returns. It'll show married filing separately or married filing jointly. So all of those things will be revealed, and it's better if we discover all of those conditions or circumstances before we are actually further into the process. It's better if we know about that ahead of time so that we're not having to deal with it later on when it becomes an actual problem.
Yeah.
And so,
And also on that note, when you're married and if you want to still get a loan by yourself, you can, but a lot of times your wife's debt or husband or partner or whatever will show up on your credit, and that will be factored. So a lot of people, they try to just go by themselves because maybe one of the spouses isn't working for whatever, or maybe they're buying it by themselves, whatever the case may be. But as a married person, be cognizant of, on the loan side, 9 times out of 10, your spouse's debt obligations are going to show up on your credit, and we do have to factor that in. I can't just say, oh, and I've seen that a lot. Oh, this is my wife's car. It still shows up in credit. Yeah, I got to factor that in. I can't just omit that credit, or omit that payment.
So we welcome Bill Gross to our call today. Good for you to join us, sir.
Better late than never. Better never late.
That's right. We're talking about disclosure in real estate, whether you're a buyer or seller, having to disclose things like your marital status. I was representing a buyer that was trying to buy the property as a single man, and he was married. And escrow will also ask for a statement of information that both parties have to sign and complete, which asks for your driver's license number, your birthday, social security number, and they run that information through a system that will let escrow and title know if there's any liens or judgments or any owed child support, things like that. So that's why it's important. Those are all the checks and balances as the closing process goes on. So you definitely want to not hide anything, because it will be discovered in the process. And when it is, then we have a problem because we weren't prepared for it, right? It's kind of like when you're going to court and you need to tell your attorney everything that's going on so that they can properly defend you in court.
That's exactly right. I even had a client that didn't disclose that they took out a loan for the down payment, and that they can hide that from me, which they did for about a month, because that loan that they took out didn't report to the bureaus yet. So I couldn't find it on my credit report. But once we got into escrow and right before clear to close, the bank asked me, what is this $11,000 debt that your client has? I was playing stupid and said there's no debt. They sent me an updated credit report showing that, there's a new installment loan, and there's a $500 payment on that loan. And when I talked to the client about it, she's like, oh, I thought that was okay, and I thought we were good to go. And I said, well, you didn't tell me about this. And, unfortunately, or fortunately for you, they didn't report it for another month or so. So That's another thing I get is, can I take out a loan so I can put it on a down payment on my home loan? The answer is no. Because you pull out that loan, it's going to affect your FICO. That new payment on the loan that you're for the down payment is now going to lower your qualifications, and it's a mess. And a lot of times the bank wants to know too, are you taking out another loan for this loan? Because that does not sit right with them. So yeah.
I think what most buyers don't realize, because they just don't know, right? When
Yeah.
you're applying for a loan, you get approved for a certain amount. Any new accounts that you open, any credit lending that you do, if you lend your credit to one of your kids because they're going to buy a new car and you think you can be a co-signer for them, things like
Yeah.
that could really affect your loan approval. So that's something that we always say: don't charge up your cards, don't open any new accounts, do not co-sign for anybody, and do not go and start purchasing things for your new home that you haven't actually closed escrow on yet.
Yeah. And I tell people, because I know there's some people which they're smart, they, put all their expenses, grocery bills on their credit card, however, pay it off. But I tell them all the time is, you can still do that, but make sure you don't overspend anymore, right? When I pull your credit, it's a snapshot, and we're going based on that snapshot.
I'll tell you guys a story on this subject. It's kind of funny. A long time ago, I was running a mortgage company, and
Oh, wow.
I had about 10 originators, and we were doing, 50 mortgages a month. And
Wow.
it was like a franchise with a company out of Dallas, Texas. And we were with them for about 90 days, and we had a 90-day review where I went in, quality control. And they called me this big conference room with the president and all these executives and me. And it wasn't like the other part of the meeting. It was all very serious. I said, but we have a problem. I said, what's the problem? He said, you want to tell us about it? I said, I don't know what you're talking about. He says, you have some fraudulent credit reports. I said, what are you talking about? Well, in those days, we in California primarily used one trade line. We used what was called Tier W, which is now Experian. And in those days, because they were in Texas, they were using one of the other ones, I think Equifax. And what happened was, there were things that popped up on one, not the other. But more importantly, the president of the company said to me, well, we ran every loan you sold us, and over half of them, there were major purchases right after the close of escrow. I said, yeah. He said, well, what do you attribute that to? I said, well, let's take a look at it. It was Sears and May Company. And I said, and I said, these are people buying a new house and they're buying appliances and refrigerators and furniture. What do you think they're doing? They're buying a house. And this bank didn't understand that the people who are buying houses are buying it because they want to put new stuff in it, right? I mean, not everybody buys a house and buys a new refrigerator or a new washer dryer, but some people do. And that's part of the excitement of a new house, right? And so some people can't hold that urge. They want to buy it before and then have it ready to move. No, don't buy until we close it. Don't do anything until we close escrow, because I've had escrows that fell apart because they bought stuff and the lender just wouldn't budge and the ratios didn't work and the rates went up and the whole thing fell apart. So I would just say, treat your lender like your attorney. Tell them everything that's going on. Don't try to hide anything, because odds are it'll pop up by then. The banks are pretty smart. And I would say, don't buy anything until you close escrow and you're handed the keys. Then you can buy whatever appliances you want, or new cars you want, or timeshares, or whatever you want. Have at it.
That's absolutely right. So in my case that I was just sharing, this real life event, I ended up canceling the escrow because the buyer wanted to pursue buying the property as a single man, and he's actually married, and California is a community property state. So I was explaining to him, it's going to come up, it's going to bite you. My name's going to be on that contract, and I don't want to get a call a year from now asking, why did you close on this escrow when you had knowledge of his marital status, right? So although our brokerage is one of the best brokerages in the world in California, and we have attorneys and things like that, I still don't want to be caught up in that kind of scenario. I like to be mentioned or talked about in real estate, but not because deals are closing, without a quick claim deed. And so those are the clients that sometimes you just have to let go and hopefully work with them in the future when they're ready and when they're ready to also follow the rules.
Good point.
Yeah. So, anything you guys wanted to mention? I know we've been on the call for about 15 minutes. So, anything else anything helpful to buyers right now or sellers?
I know we're probably talking about, if you want to talk about contingencies and how important those are to the seller, if you want to do that now or on the next one, but I know that's very, very important.
Mm-hmm. Yeah, so really quickly, we can go into it in more depth on the next call, but you have 3 contingencies when you're in escrow. As a buyer, your first one is your physical inspection. Your second one is the appraisal. And then the third one is the loan. So let's just say you've already reached your expiration, or you know that you're going to be expiring on that contingency and there's still work that needs to be done. Maybe your lender still has conditions that they're working on. Then your agent needs to ask for an extension to remove that contingency. And that would be done on an extension request on paper. The buyer signs it, it gets sent to the listing agent. They ask for a couple of extra days. Now, if Bill's a listing agent, watch out because he's kind of tough. He may not give you that extension. But those are basically the 3 contingencies you have while you're in escrow. And the real estate purchase agreement is defaulted to 17 days. When your agent writes the offer for you, they can change that time frame. So they can lower it to 15 days, 10 days. That's usually done when the offer is, you want your offer to look more appealing to the seller and more competitive. Just depends on the property and what the circumstances are. But that's something that the buyer would talk to the agent about on the time frame for contingencies. And also the lender, right? Some lenders, you can get things done really quickly, or they might need the full 17 days. But usually appraisals can be done within like 10 to 12 days. And at that time, if the property does come in at value, then you can remove that contingency. Once the buyer approves the physical inspection, then you would move on from that inspection and that contingency and sign off on that contingency as well. So in fact, I just removed contingencies on a property I'm in escrow on today. So we're going to be closing next week. Excited about that one.
Yay. So I would say, if I could add to that, and Patricia's a lot nicer than I am. You know, I always feel like my job is to defend my client. And so when I represent a buyer, I tell them, let's sharpen a pencil to get the contingencies as fast and short as we can on the offer. Because make the offers attractive, because when you're in escrow, you have some leverage. You have no leverage when you're not in escrow, right? There's other buyers, other offers. When you're in escrow, for them to counsel you over a couple of days extension is harder than them say no when you try to get it up front, number 1. Number 2, most listing agents don't pay attention to their responsibilities. And so what happens is the listing agent will say, oh, you have to waive your appraisal contingency. And you can waive a bunch of contingencies as long as you have one. Think of a contingency as an exit door, right? If you go into a room, I don't really have any military training, but imagine if you went into a room with bad guys, you always want to leave yourself an exit. You can have 2, better, 3, better, but as long as you have one and you have access to that access point, that's good. So think of a contingency as an exit that you have access to. So sometimes it's strategic to waive 2 or 3 or 4 of the 5 or 5 of the 6, but you keep the one. But the one you make sure you watch really carefully. And so what I'll do sometimes with the buyers, as a buyer's agent, is I won't tell the seller they haven't met all their contingencies. And so I get the inevitable, hey, it's time for you to waive contingencies. I'll say, oh, we're still waiting for you to provide this. We asked for it, it's documented. We went to escrow on it, we don't have it yet. And then they'll provide it 2 or 3 days later. Well, that just bought me 2 or 3 days. But we also have 7 days to review it, perhaps, if that's the standard. And then at the end of those 9 days, if there's 2 things are missing, I only tell them 1. And they'll say to me, well, tell me everything we're missing. And I would say to them, that's not my job. In fact, it's the opposite of my job. My job is not to help you close the door on my client's contingencies, it's to keep it open. And so I've had cases where I went back in a second or third time, and I had the listing agent like yell at me, why didn't you tell me up front? Because we wanted the extra time all along. That's my job. I'm not being dishonest. You didn't do your job protecting your client. I did my job protecting my client. So again, it's not about ethics, because the only ethics I have are to be honest and forthright, but to my client. Now, I can't be dishonest to their party, but I don't have to tell them everything if it's going to hurt my client. In fact, I'm not allowed to. So that's my strategy. So as a buyer's agent, I would always say, sharpen your offer as sharp as you can, even if you're a little bit uncomfortable, if you can defend it, and then lean on your buyer's agent to try to find a couple extra days in there to give you the extra time you might need.
That's right. If you need it, look for those days.
Yep,
There's
exactly.
usually something you can find. And in this transaction that I'm closing on next week, that's exactly what happened. We didn't actually need the extra time, but we just held on to it just in case, because the seller didn't disclose on their documents, on their disclosures, that there was an insurance claim. We found that out when we were shopping for insurance. So that bought us some extra time, because we had to get an addendum to the seller disclosures, which bought us extra time to review the addendum and the claims that they were at that time starting to disclose, which should have been disclosed in the beginning. So again, disclose everything in the beginning so that you don't come up with these hurdles.
Yeah, very good.
Well, I think we had a pretty robust call today, lots of information. And if anybody has any questions or comments, please drop those in the link. We're going to be posting this on YouTube and Facebook, and feel free to post any comments and we'll get back to you and answer those as soon as possible.
Very good.
Yeah.
Well, I think
great
that's it. Is that a wrap? Are we ready to go?
That's
Yeah.
a wrap. So
Am I wrapping up, or are you wrapping it up?
you can wrap it up.
Okay, well, I'm Bill Gross, even though I was here the whole time. I got here a little late. But we do this every week, and with Tricia Castillo and Shannon the lender, I'm Bill Gross, at Bill Gross Probate. Shannon, how do they find you if someone wanted to do some business with you?
They can call me 661-317-8484 or my Instagram, FUND with Shannon.
There you go. Fund with Shannon on Instagram. And Patricia Castillo, how would somebody find you?
My cell number is the best way to reach me, 323-365-9909.
There you go. And I'm at Bill Gross Probate. As always, have a great week. We'll talk to you guys soon.